Hello, everyone. Today we're here with Chris Brecher and John Carter to talk about Chris's patterned approach to trading. While nobody can predict the market, we're able to see redundancies across the charts that indicate specific chart events. Nobody knows these patterns better than Chris, and we're happy to have him here today. Some quick housekeeping to go over. You may see some interactive features like polls and offers popping up during the webinar. Also on the right-hand side, you'll see a live Q&A tab where you can ask questions that will go to our moderator team as well as Chris at the end of the presentation. If you'd like to maximize your screen real estate, you can minimize the chat section via the down arrow just above the chat, and you can also maximize the video by hovering over the video and clicking enter full screen. And now to kick us off, I give you John Carter.
All right, awesome, Brandon. Thanks for the intro, and welcome everybody. Always good to see everybody on what is today? Wednesday night, 7 o'clock Central. You know you're really into trading when you could be watching reruns of Better Call Saul or something like that, but you want to be here and learn about the markets, which is great. I love the markets. I'm super passionate about the markets, and I've always found that the moment I think like I know everything is the moment also that the markets rear back, and kind of pop me in the face. And what's interesting about Chris is that I've known Chris for about 6 or 7 years now, and there was a period of time. This was about 5 years ago. We were trading together, and I've got the setups that I like and the squeeze. And I remember it was options expiration, and I was playing Amazon. I was like, "Yeah, I'm looking for Amazon. It's going to rally and it's going to pin at this level." And Chris was like, "I don't know, man. I mean, the way I'm reading this, and I don't remember exactly what the prices were, but I think I was looking for, it to go to 420." And this is obviously, way before its run up. And he's like, "No, I think it's going to 400." And we're talking over the next hour. So, I stuck to my setup, and Chris stuck to his, and he put on a put butterfly. And sure enough, Amazon dropped right into that 400 level. Now, there were a couple of things going on. I think there was some reshuffling of the indexes, but it got me interested in Chris's style of trading. And, as he started talking about, well, I like to look at chart patterns. I'm like, yeah, I've studied chart patterns too, and half the time they work and half the time they don't. I'm not too excited about chart pattern. He's like, well, here's the way I look at them, and here's the things that I use. And so when I started following that, I was like, okay, well, this stuff works like a lot. And so it kind of really opened my eyes. And like anything in trading, you can have, a setup, but it's not just if you read a book and you read about a pattern, okay, that's one thing. Anybody can do that. But if you talk with someone who's been studying this for 40 years, has been watching market action for 40 plus years, and then knows how price reacts to that pattern in certain situations, that's where kind of the gold comes in, because that, as a trader, we're looking for those moments in time where we have a high probability of success. And a lot of times that means patience, but also having specific checklists of things that you're looking for. And just having a pattern by itself won't cut it. But if you have a pattern backed by all the things that someone who's been doing this as long as Chris has and watching the stock market for as long as he has can bring to the table, then you change the trajectory of your trading journey. So that's what we're here for tonight. And so with that, I will be quiet because I'm going to sit back and learn as well. And I would like to hand this off to Chris Brecher.
Thanks, John. Thanks for the nice introduction. I see a lot of subscribers that I recognize, so it's sort of like it's 8 p.m. on a Wednesday and the regulars are shuffling in. So it's pretty cool. I'm Chris Brecher, Senior Managing Director, Stocks at Simpler Trading, and I'm going to try to go over how to find amazing trades every day. This was 20 to 21 stock market, and I got to tell you right now, it was a lot easier. So the Fed was behind you because of COVID. They had your back. They were just printing money. And every dip, you could just get away with buying things. You could just get away with buying things. And
Chris, you probably saw you just need to share your screen there.
Oh, the little screen sharing thing is on. So let me turn it off. Resume screen.
There you go.
Yay. So it's back. So this is what I was showing. So if you're trading futures tonight, I probably lost you 10,000 in opportunities in that 1 minute. So I apologize for that. Basically, in 2021, the Fed was at your back. So any dip you just bought, you got used to just buying dips and making money. The problem is then you got inflation. So printing money caused the inflation, even though they've printed money for years and years and years. Now you also have supply problems. So you have the inflation going up, the Fed raising rates. If you want to know how amazing it is, a 1-year note a year ago on January 3rd was less than 0.3%. And now it's 4.7%. So the whole point is markets could still go up, but now bearish patterns are working as well as bullish patterns. And as you see on here, if you try to buy dips in here, you could have your head handed to you. So definitely keep that in mind. Bond markets broken their 40-year uptrend. So I started in 1980 with and we'll go over that later, with sort of a Wolf of Wall Street firm, and the bonds were still very high. And when I went to the floor as a clerk in 1982, Volcker eased rates finally, and the stock markets exploded and bond rates plummeted. Now it's different. Yeah, believe it or not, that trend line is held for 40 years until now. Now, that doesn't mean markets can't go up, but we're probably in a higher rate environment for a long time. It's sort of like a super tanker. So the super tanker has a lot of inertia on the way up, and it takes time to turn it around. And it's the same with inflation. It's not like inflation is just like that, like a V-top. It usually futzes around for a long time, and the Fed stays tight longer than you can ever imagine. So that's why you can make money on the long side. Don't get me wrong. Some of the strongest rallies have been in bear markets, but I definitely think equally you'll be able to find bearish patterns, and you have to be prepared on how to find those. This is a case study of the Fed meeting. This is exactly what I'm telling you about. Markets can go up faster than they can go down. This looks like a bull flag to me. Now, you might say, but didn't it break here? And that's where my experience helps. Look at all that support. Yep. So I didn't trust that. And then look on the way up. Nothing. And yeah, that was pretty impressive. So that ended up being a bull flag. And if you bought on the break, that you had a good day. The key is you don't buy the way down when you're at support. This is, I'm telling you, some of the worst days are my most profitable because we'll trade bear flags and bull flags. One thing I wanted to show you, this doesn't mean I'll do this in the future, but all of these combine anywhere from a $22 stock to a put fly to a vertical put spread to just shorting stock to just here losing a point in Chipotle and then making 7 points. So it worked really well. So just want to let you know that these real transportation stock, SPX, SPY, you name it, I'll trade it. So if you, even Bitcoin, but I didn't trade it now, but we'll trade whatever can make us money. Just keep in mind, some of these were longs, some of them were shorts, and some of them were option plays. Now, who is this for? Do you keep getting burned in this market because you haven't been able to adapt to changing conditions, and you're unable to find good setups, and because of all this, you're losing confidence and you're struggling to determine market direction? The key in here, the real key, is finding definable patterns combined with feel. I'll go over feel a little later, but look at this right here. There's your bull flag. A lot of people ask, what's a bull flag and a bear flag? Sometimes they just stick out. This was on expiration day. I love trading on expiration day because you get a ton of bang for your buck on options, as they have hardly any time premium left. This one, we just bought stock when it broke out. Made like 2.5 points. But if you would have bought options, you would have made a lot. So basically the 230 calls went from 30 cents to $2. That's why definable patterns plus feel are the key. Now, this is really interesting. On the upper left, that's 1987. Yep, I was on the floor. So shorting this move made my year. This is I have it a little zoomed out, but that's called a Brecher ledge. It was also a bear flag against a big old top. So when I saw that, I bought puts on Friday. So I bought puts. I was afraid on Monday the whole system would collapse. So I left the floor and went upstairs. Upstairs means above the CBOE floor. And I didn't have an office at the time. So there's a communal room of 6 different monitors. That was it. So I sat next to this person that was sitting there with his head down and then his head up, chanting, sweating to the bone. And it ended up, he was in the opposite positions as me. He ended up losing $60 million that day, one of the largest individual losses in 1987, and then fled the country. Now, the interesting thing is I'm a collector of books. Like John said, I love markets. He loves trading markets. I have a ton of books on crashes. So when his office had FBI tape on it, I told my clearing firm, First Options, that I wanted his room when the FBI tape was off. And that ended up being my room for the rest of the time I was on the CBOE. Sort of a bizarre story, but it goes to show you if he had looked at patterns, he could have had a different career. Now, this is what's wild. The last webinar I did, I showed this pattern. I showed this pattern so similar to 1987. But the cool thing is, my webinar was on a Wednesday. I added this slide on Tuesday, and then Wednesday, it fell apart. So it's pretty cool on how history repeats itself. These patterns have worked forever. They worked 40 years ago. They work just as well now. Now, these, like I said, these 3 patterns have worked for over 40 years. And then there are 4 times a month where I target a lot bigger gains with options. And what I do in here also is quickly and easily build hot stock watch lists focused on opportunity sectors. I'm telling you, it's a lot easier than you'd think to find the hot stocks. And the power of combining basic chart patterns and indicators to find explosive moves before they happen. The deal is chart patterns, feel, and a lot of things I've learned over 40 years to hone my strategy. A thing in this, and it's a huge thing, is confidence. It's a huge head game. If you start getting whipped around because you are not being disciplined or you're not using these patterns, you'll lose your confidence. So the first thing is confidence. The second is more consistency. And you'll get that if you use more consistent patterns and just stay with those and use some other things that help with feel and the overall market. Now, I trade this strategy with my own money. So the actual winning and losing trades will be shown. They're not hypothetical. Now, I want to make this clear about my own money, because when I was on the floor trading and doing really well, people asked what my dad did for a living. And I said he sold cars. Yep, he sold at the same Chevy place for 25 years. He had the white belt and the white shoes. But I didn't say that. I just said he worked at a car dealership. They're like, oh, you mean he owns it? And so there weren't a lot that used their own money. But these are hypothetical trades, and past performance is no guarantee of future results. There's inherent risk in trading. These results are real, but I can't promise you'll get the same or similar results. It's not financial advice. It's for educational purposes only. This is what happens when you lose your confidence. So you listen to CNBC or you listen to Fox TV, and you start drawing trend lines in all these places or all kinds of Gann lines and all this stuff. It doesn't have to be that difficult. This is the same chart without all the noise. That's where I start. My first priority is to identify bull flags, bear flags, and Brecher ledges. This is a beautiful bear flag. The real problem is not having enough confirmation getting the trades. I'm telling you, after 40 years of experience, when I combine chart patterns with indicators and other factors, things like volatility of Fed and missing trades are not a problem. Just like you saw in the prior slide with the Fed. When the Fed had their meeting, you cared about the pattern. You cared about support and resistance. You know, when you look like this, when you start asking Alexa for what this chart looks like or what trade should I do, that's when you know you got to make it more simple. Now, this is an interesting trade. This is an actual trade I did. So I shorted it here. My mantra is 3 reasons to get in a trade and 1 reason to get out. So I shorted right here and posted in the room that I shorted. I didn't have 3 reasons. In fact, I don't even know if I had 2. So sometimes you do that. You have an itchy trigger finger. As I was posting the trade, I already got stopped out. We lost a point. On the other hand, it was still setting up. So we lost a point. And then we got in when the factors were right. The overall market was selling off and a number of other factors. It broke this and we made 7 points. I'll do that all day of losing a point and making 7 points. But that's an actual thing that we did. There's the trade. Boy, I love looking at that. So that is what we did. We shorted on the break and we bought down here. Now, this is the great news. There's always another setup. Like you saw, I screwed up the first one. There was a setup right there in Tesla. There are tons of setups every day on different time frames and sometimes daily, weekly, but we play 1 minute. I usually have up 6 kinds of chart time frames, and I look for patterns all the time. And that's where a hot stock watch list comes in, which I'll talk about later. The more volatile the chart, the more opportunities you'll have. I just can't tell you on one of the bigger trader mistakes is finding a good pattern on a cheap stock like AMD. For years, AMD stuck at $20. So the markets had great bull flags in, let's say, Amazon. So instead, they went and bought 1,000 shares of AMD at 10, which is $10,000 worth, and made 20 cents. If they're lucky. Instead, Amazon went up $10. So just go on the volatile stocks, which we adapt to every day. This is Deere, talking about a volatile stock. Here's a beautiful bear flag for you. Now, as you see in here, not overbought or oversold. And the second it broke, that was it. So those are the kind of case studies that we do. So I actually was trading till 8 tonight. That was Schwab exiting at the platform. So I love trading, and believe it or not, I was looking to trade after the close till 8. Now, chart patterns can complement almost any strategy and be applied with any other indicators. I'm staying tuned to what the other traders are doing. In my mastery room, I help answer questions about the strategy, trade setups, and the market conditions. So it's a learn as you go. But a couple of things. We try to make the room where everybody's encouraged to give their ideas. I have added indicators from other people's ideas. So it's a give and take. I help a lot. They help me. We try to encourage all of us to succeed as a community. The other thing is there are a ton of indicators. This is just a complement to your indicators. So it's just these powerful patterns are really a big deal. So number one, how do I find opportunities in the market every day? How do you gain confidence? Well, I'm telling you, the more tight the pattern, the more confidence you have of doing the pattern because you can do a tighter stop. The tighter the pattern, the tighter the stop. It's an easier way to gain confidence trading. And then you don't have to worry about the fear of missing out and winging it when it comes to chart patterns. So I'm Chris Brecher. I'm Senior Managing Director of Stocks at Simpler Trading. I'm still wondering if senior is because I've been doing this 40 years. And I've been a professional trader for 40 years, including 8 as a floor trader on the CBOE. This gives me a unique advantage as I've seen all kinds of markets. And number one, adapt. Every day you have to adapt. Those 3 reasons for doing a trade can change every day. That's where I'm here to help with that. Here we go. I started in a boiler room. I sure did. And think of Wolf of Wall Street. If you think that was dramatizing things, you're wrong. It was crazy. Moved to Chicago after a year. And let me tell you why. Because right here, when the boiler room were trying to get people to do trades, they were taking option shots. They all lost. They weren't using charts. They were just taking shots. And I'm like, who's on the other side of this? I wanted to be on the other side. I wanted to be more the house. So I moved to Chicago, became a clerk on the Chicago Board Options Exchange, learned my tools. So I worked for the exchange, but the market makers were talked out loud about how they found moves and how they did feel. I didn't know about chart patterns yet, but I learned about feel, which is extremely important. I then went to work for a discount stockbroker where I got to trade commission free. The big deal, remember Bally. So my parents sent me $200 for a plane ticket to North Carolina. I used that money that day to buy 1 put in Bally at 2. I turned it into, sold it at 4. So now I had $200 to trade with, $200 for the plane ticket, and I turned it into $25,000 in 2 years. Then I went and I leased a seat on the CBOE after a couple of after the 25,000 I made, and then bought a full CBOE seat literally months later. Usually when you lease a seat and you start small, you're on that for a couple of years. I was on it for 8 weeks. And so I had 95 out of 96 months of successful months on the floor. When I saw the trend toward electronic trading, I joined an NYC day trading firm where I was in the top 5 out of 800 traders for all 9 years. Now, why was I in the top 5? Patterns. So see all these people around me? They started leaving the floor because of electronic trading. My boss said I was the only one for years that was the only floor trader that was successful upstairs. Why? Because look at this picture again. Everybody is trading with floor brokers, except me. I'm looking straight ahead and looking at the relationships between stocks, between indexes, and that was my edge. So I got a feel, plus I had my feel, and I learned myself about chart patterns. Then I joined that NYC day trading firm where I went and used my expertise, and I've been trading independently since 2003. The strategies I'm going to show you, I've used for 40 years. How did I do this? How did I do 200 into 25,000? Well, number one, I worked at this discount brokerage firm. You got free commission. So everybody in there that was a broker was trying to do orders. They all lost money. They wouldn't listen to me about chart patterns. Also, like I said, feel. So up here, when I heard traders when I was on the floor saying, I'm shorting this market, it refuses to go up. If the overall market's weakened, this is going to get crushed. Well, what's that do? It means the stock is sort of flatlining, which is like a Brecher ledge. So I learned how to do charts. So I could use chart patterns and the product's relative strength relative to the big indexes. They all tried tons of indicators. So things they made up, and it just didn't work, just to let you know. Many of them use things called like the Weebly and all these bizarre things. And they'd ask me, how do you make money today? I'm like, well, the Cubs won today, so everybody's excited. So I just bought. I just bought because of the Cubs. I didn't tell them the real reasons. I did earlier, but they wouldn't listen, so I just made up stuff. This is how you level the playing field. Now, this should have been on an earlier one. This is more like my boss with the boiler room after he's fleeced another customer. But basically, how did I stay level? How did I stay level with all those people in the pit that all got an edge with floor brokers? It's by doing chart patterns. And what happened a lot is a symbiotic relationship. So if you go back to here, where I am on the floor, I would see a chart pattern. They all would be getting their edge from floor brokers. I would go buy them. The entire crowd would go sold. They made their edge, and then I made money because I had the direction of the stock right. So total symbiotic relationship for 8 years. And I've been teaching now and trading for 40 years. I love teaching, and I especially love trading. And I still am amazed how few people are using charts. I'm just amazed. And I've tried. And the problem is, you go on to sites on the internet, you go into Reddit, you go into YouTube, you go into just Google, and all these people show bull and bear flags. And then they say there's only a 55% chance of success. It takes a lot of experience to tip that in your favor. And that's what I try to help with. This is when I had emergency surgery for my back, emergency major surgery on a Sunday. I wasn't real thrilled because I had positions, but they ended up okay. This is Monday when I woke up, and I'm sitting on the iPad saying, holy cow, that's a bear flag in the SPY. So I shorted 100 shares right here, right on the opening, and made 2.5 points, $250. Now, there's a couple of keys in here. It went a lot lower, but my wife was coming in, would have killed me if she knew I was trading when I just woke up. Now, the other thing in here that's really important, I didn't just see the pattern. I had 3 reasons to do this trade. So this was only one, but I had 2 other good ones. One is, why did the markets go down? And those reasons stayed in place. Number 2 is, while this was consolidating, other major stocks never bounced. So I was more confident of trading the SPY ETF instead of the futures, and it worked out great. The problem, number 1, don't have an edge. They're used to an edge from the floor, but now what happens is you get confused. You say, oh, the algorithms and the big brokers, they know before we do. Not necessarily true. If you have the right patterns and the right indicators and the right feel, it works. The other, using only one reason to trade, like you saw in Tesla, yeah, that didn't work out so hot. They don't choose the right stocks. Like I said, AMD versus Amazon, they use the wrong patterns. And let me just tell you about the right stocks. So let's say that you see a bull flag on a 1-minute chart, but the stock looks like this on a 15-minute chart. Well, that's what I mean about you taking the wrong stocks. You have a bullish pattern with a longer-term downtrend that's likely to give you problems. So you got to choose trends, and that's something I love to share. And just like I said, they don't combine multiple time frames. I always go on the longer-term time frame and then combine that with shorter term. Over trading, we've all been guilty of this, because now it's commission free, of buying Tesla, selling Tesla. I will only trade Tesla if I see a defined bull, bear, or Brecher ledge. And like I said, they're ruled by their emotions, no doubt about it. Yesterday, I was working on the webinar. I was extremely aggravated trying to short the SPY when there was no bear flag. I was like, oh, this is ridiculous. But the more aggravated, the smaller my size. I started with 10 shares. I went down to 1 share because I didn't have enough reasons. I'll do that. So I followed a trading plan that if I'm working in some other distraction, I'll trade as small as possible or not trade. They chase moves. Yep, the market opens up, it gets overbought, and they buy it on the top. They don't follow a trading plan, and they definitely don't put in stops. Remember, in 2020 to 21, you didn't really need stops. If you bought on the way down and kept buying, you made money. Everything changed when the Fed was a right a headwind. And I can't stress enough about a feel of the market. It's incredibly important. The other thing, they trade news or rumors. Now, I want to show you what I mean by that. And they only follow indicators or only use chart patterns. You got to combine these. But I'll show you a perfect example of a stock that I was in and you could have gotten yourself hurt. All right, this is CRSP. It's a biotech stock, CRISPR technology, one of the leaders. So here you go, of it going up here. You could just buy every dip on the way up. But once it turned, you didn't have a chance. And what happened during then? I had people calling saying, hey, I heard over the weekend it's going to get taken over, all this stuff. And I'm telling you right now, it just kept going down. And what traders missed while it was going down is if you go to an ultra short-term chart, there were a ton of bear flags in there. You're talking about a stock going from 130 to 70 in literally 2 months. There were a tremendous amount of bear flags where you could have made a boatload instead of trying to buy on the way down. Now, these 3 reasons to change minute to minute. So, like now, what happens if I'm looking at a speculative stock and Bitcoin all of a sudden goes down 2,000 points? To me, Bitcoin is a gauge of speculation. So that was one of the reasons one day. Another reason could be the Japanese market is broken down or broken up. So these change based on different factors. Could be price action charts, indicators, geopolitical news. Sometimes it's only indicators. Now, this is an interesting one. Now, you might say, oh, that's another one from 1987. That's today. That's today. So the bond market was already going down. Like I said, interest rates are a huge deal. The higher the interest rates, all these valuation models like price earnings contract. So that's why markets go down when interest rates go up. That's one of the reasons. So the bond market had kept going down, and basically we didn't have to short up here. Yeah, so you missed 10 points. You wait for that trend line, that bearish pattern, and then you quickly make 25 points. That was pretty cool. So the whole idea is confidence. You were a lot more confident here of shorting than up here on the way up. So market feel can be taught. It comes from many years of experiences, 100 of conditions and criteria. It can be taught. Now, this doesn't guarantee profitability, but it helps me jump on the correct side sooner than others. So here's another chart I have to show you because I was dying to mess around with it today and I didn't. This is Deere. So as you see, and I got to show you this. I can show you on multiple time frames, but that's Deere on an hourly on the left and a 5-minute on the right. If that looks like a bear flag, you're dead right. But what's happened the other times? Yeah, it went up 5 points first. This is where feel comes in. So if the markets tomorrow morning open up, and today they opened down because the bond market went down. The bond market's rallied a little tonight. Yep, I'm still watching the market. If this does this, it doesn't rally at all, that's where feel comes in. Then I'll be more aggressive about shorting it. But just keep in mind, this is a massive move. So if this breaks down, you're talking about at least 10 points. So one way to do it is to day trade it. The other way is determine the overall trends of the market and doing some put debit spreads out of the money for next week. So traders who chase breakdowns and breakups, I'm telling you right now, one of the biggest mistakes I'm seeing now is buying on the break when it's already then oversold. So then they ended up getting stopped because a lot of times this happens. You chase it down here, it gets too oversold, but they shorted here because they're like, oh my gosh, that's 15 points. They put a stop here and they get stopped. It goes up to test the trend line and then it goes down 10 points. That's a trader's nightmare when you get stopped when you ended up having the right idea. Now, this is one of not combining time frames. I showed you one earlier. This is an actual one. S&P getting hammered over here, hammered on a 15-minute chart. Short-term chart, if you weren't looking at the left, you would say, boy, that's a bull flag. You got to look at the overall trend direction. And like I said, AMD, just remember AMD. And just remember that you don't choose the right stocks, and you got to have a watch list that shows you the hottest stocks. Now, that can change also. So you might think I'm talking about Deere, I'm talking about Lamb Research. I'm also talking about small stocks. Let me just tell you right now, here's Bitcoin. In fact, I'll show you on TradingView. It's a lot clearer. I use both charting patterns. So here's Bitcoin. It's a measure of speculation, in my opinion. So Bitcoin's gone up. So what happens? Speculative stocks have outperformed the markets. If this breaks up, I'm going to definitely look for long ideas in speculative stocks. Now, if I'm in speculative stocks now anticipating, and this breaks down, yeah, I'll lighten up or get out completely. But that's what I mean by feel. That you have to know that Bitcoin really helps with your hot stock watch list, because while Bitcoin's going up, your watch list might be smaller stocks that are acting well. And the key to that is the volatility and the proper deployment of capital. Don't get me wrong, we're not just trading 1-minute charts. If I see a longer term idea, we'll buy some calls, either out of the money or in the money. And this is what I'm talking about. We were in it. There you go. Yep, we were in it. So what did we do? We saw this turning. We saw Bitcoin going up. So we bought the 5 calls for 20 cents that went to $1.20. So you see all the reasons that lined up, at least some of the reasons. So it doesn't have to be a day trade. I just want to make that clear. And they're using the wrong patterns. You got to use the right patterns for the current market condition. So if something's in a long-term downtrend, then you're going to have to short-term find some bear flags. So you need to also, like I mentioned earlier, you have to go on your risk tolerance. So if you don't want to trade the ES futures, go and trade some of the SPY. The difference is this. You go and trade an ES future, and you're talking about a lot of movement. And one future is one future. But instead, you could go trade 30 shares of the SPY. You definitely won't make a lot, but 30 shares here is $180. Sure, you can make a lot in the ES, but it's all about your risk tolerance. Here's another one for you. Lamb Research. Scary stock. It has dollar-wide markets. When you see a defined pattern, like you saw here, there's a big old defined pattern in Lamb Research. There you go. There's your defined pattern. When you see that, you could just go and buy out of the money puts. Definitely better risk tolerance. You could have bought the way out of the money, because this is a way big ledge, for like $1. Instead of putting out 50 shares of this, you're talking about $25,000. And then unlimited upside risk. And if you put a stop, your stop had to be 3 points higher. That's almost impossible to trade that way. Here's a pattern, not a flag. I get asked this so many times. Why a flag is a continuation pattern, not this kind of thing. Now, what's ironic is after it broke, there's your consolidation, and there's your consolidation. Stuck out like a sore thumb. But don't go for the slop. It's a prior move that matters. This might be a bear flag, but the prior move was up, not down, so you avoid it. But like I said, millions of patterns a day. There's 2 of them right there. Now, why did the first bull flag fail and the next one worked? It all comes down to support and resistance, combining indicators, and combining relative strength relative to other big stocks. That was a big deal with this. And I try to teach that. And a lot of traders do this also. They take too many positions. So they get bearish, they short 10 things, they have no longs. And what happens if the market turns? It's really hard to put in stops on 10 stocks. And it triggers emotions, it increases the risk of wiping out your account, and it's hard to manage. Now, I focus on 3 patterns. Just the bull flag, bear flag, and the Brecher ledge. I do other ones, and every time I mess up, I go back to these 3 patterns. It saves time in front of the screen because you can wait for the setups. So if you're trying to trade every little tick in Tesla, it's just going to drive you crazy and it's going to stress you out. So you reduce risk by looking for better setups so you can focus on better trades. Here's an Amazon bull flag. Here's another one about trading on Friday. So you could buy the stock and do these bull flags. And this was 30 minutes before the bell. So right here, there was another bull flag. The 88 calls were 5 cents. They went to $1. That was a beauty. So 2,000%, really impressive. This was 60% in a 1 hour. And there you go. That's my actual post in the room. We bought the 73 calls at $1.15. I was just going on this bull flag. And then we sold them at $1.85. Pretty cool. And as you see, identifiable bull flag. Here's an early morning bull flags in the ES. So this was way early in the morning, but I wanted to show you what it looked like. This one was a beauty. The tighter the pattern, the tighter the stop. So you're talking about in here risking very little to make a lot. That's the things I teach. Here's a bull flag at Amazon. Tight little bull flag. Doesn't look like a lot. Really wasn't. It was $1, but it's still $1. It helps with confidence to know how to spot those kinds of trades. Now, it doesn't have to be options or stock or futures. It can be Forex. There's a bull flag in the dollar. That was good for a huge move. And here's another one in the ES that was a bear flag. Another bear flag. Why do I like this one better? Because the tight consolidation. So if you shorted on the break, you had about a $5 stop. 5 point. That's it. If you were wrong, you probably get out up here. But it went down $70, 70 points. So you're risking 5 points to make 70. That was the previous move. That's a beautiful thing. Now, the end-of-day SPX options are all the rage, and the SPY options. They expire every day. They have a new expiration. A lot of people were asking me today, should I buy those puts? Should I buy those calls? I only trade these like Tesla. If I see a bull flag or a bear flag, then I'll be aggressive in trading it. You get a ton of bang for your buck, but you got to wait for the right patterns. There you go. There's your right pattern. This bear flag was worth 13 points in 10 minutes. 13 points, but you could see a mile away that bear flag. A lot of people ask, is this a bear flag? Well, the prior move was up. Is this a bear flag? Well, it doesn't show you anything. I think you see what it looks like, but you got to combine it with a lot of other things, which I love to harp on, have 3 reasons. Now, this is chop. These are the kind of things when I get aggravated. So I shorted it. It wouldn't go down. Now, why would I short it? So it looked like a bull flag on a longer term, dead right. One of my best trades that day was losing 20 cents. So because I definitely didn't have enough reasons. And then you have a Brecher ledge. Now, a lot of people ask, what's the difference between a Brecher ledge and a triangle? Triangle looks like this. Well, sort of like that, where it could break up or down. On the other hand, a Brecher ledge, it is tight like that. There's no evidence that it could break up. And that one was good for 200 points. Here's a Brecher ledge in Amazon. That was a good one, real good one. That was worth 3 points. Never were in trouble of getting stopped out. An easy trade. So I have to have 3 reasons to do a trade, only 1 to exit. And I'm telling you, there's so many setups on these. If you get out, you can always get back in. There's always another pattern that identifies itself, whether it's crude oil stocks, crude oil, gold or gold stocks, the S&P, the bond market. I'm always going to be able to find setups for you. And your trading plan, like I said, needs to fit your goals and your risk and definitely your personality. So if you're really averse risk, then you go and buy out of the money things that you're going to lose as little as possible. But if you're right, you can make some good gains. And chart patterns confirm indicator signals. Indicator signals confirm chart patterns. I like to combine all these. So I like to use free indicators. Now, keep in mind, though, there are a lot of indicators, and I'm always trying either paid or free indicators to see if they help me with what I'm doing. Whatever gets you to the end game, that's how you do it. You want to make money consistently. I use the chart patterns, I use some oscillators, and I use some indicators, some moving average indicators. Now, how do I do a hot stock watch list? Now, I'm changing this every day, what I'm talking about, because like I say, it changes. One way is I use FinViz to scan for hot sectors. It'll show you like a heat map. The other way is to look at what percentage is up the most. And if they're all like low float, high short interest stocks, I'll do a watch list of those. If it's that Deere opened up 50 points, then I'll go and add all the stocks that are like companion stocks like Caterpillar. Or I'll scan with Thinkorswim. Now, one of the ways to do it, there's a little trader trick for you in here, is to take the mark change. I do this every morning. I look for what's down the most and what's up the most. This is after the close today, but I look in the morning to see if there's anything funky. How do I pick them? I go to Market Watch. I go to Public. I go to S&P 500. That's good enough for me. And I look at which ones were up or down the most. Those go into a watch list. Why? Because they're volatile if they're up or down that much. And that's one of the ways I do a hot stock watch list. The key steps is first have a main list. My main list is this. It includes all the biggies. So you go into my main list and you have all the stocks like the Humanas, the Chipotle, the O'Reilly, and so on. They're all high volume stocks with relatively liquid options. Now, if I see a hot group, like I said, the oils, when oils futures are soaring, I'll add oils. If I see unusual option activity, I'll add those also. And I always have these charts on the screen. So I found that multiple time frame charts of these help even more. But I always have the equity futures, the bond futures. I have the tick and the advanced decline. Then I have like some big FANG stocks. So just keep that in mind right in there. And then I have in here some hot stocks, which happen to be the chip stocks, the Costco, the Home Depot, and Netflix. I always have most of these on my screen. Now, this is something that I just had to show. When we say about chasing moves, here's a perfect example of something going down. Everybody on Twitter said we're going to crash. And I'm like, you're oversold already. Let's see what the oversold rally is like. Well, as you see, it was spectacular. So you don't sell in the hole. And this is the next thing. So JC invented the squeeze to consolidation. It's a contraction in volatility. I use it on multiple time frames. Now, almost all bull and bear flags are squeezes, but not all squeezes are bull or bear flags, even though they can work. Don't get me wrong. But for scanning purposes, I use a scan that includes the squeeze. I've tried NR7, NR4, ADX under 20, no go. So even other ThinkScript things that are on internet, they're not as good as the squeeze. So my scans, when I look for bull or bear flags every morning or Brecher ledges, includes a squeeze. So what I've shown you tonight on how I combine chart patterns, indicators, and my hot stock watch list to only take strong trades that line up. Skip the rest of the noise as much as possible. Now, I'm telling you right now, Deer might have a Jennifer Aniston pattern tomorrow. Yep, it might act bad all morning. So definitely I'm going to be watching Deer, and I would put Deer up on the screen and let's see if it works. And I have a lot more to show you. Now, there's my new chart patterns mastery room. So we're having a strategy class 4 hours on Saturday, but the room is the key. Continuity. I can't stress that enough. Being there all day. It's incredibly helpful for me to be there all day and to jump on if I see something. So it's designed to help you master strategies at your own pace. So you don't have to do trades I show. I'm going to sit there and share my screens and point out things. So it's like giving you a fish while I'm teaching you how to fish. So it's more than your typical trade alert service. Like I said, community. It's an interactive, smaller group setting that guides you throughout your trading journey. I'll help you master it, and I'll send trade alerts to your phone if you're not at the screen. And it's a great way to stay up to date on what I'm doing. Now, the thing in here, and I got to stress it, is the continuity. So you get live trading 1 hour in the morning, 1 hour in the afternoon. So I start a half hour before the opening. Preparation is really important. Then I'm on a half hour. And if I see more things, I'll jump right back on. Real-time trade alerts. If I don't jump on the mic, then I'll just put them in the alert window and it'll get sent to you. Now, the other thing, at the end of every event, you'll get a question and answer session with me. But keep in mind, I encourage questions and answers. I encourage it in the room. I love answering questions for everybody. So the entries in the flags, by the way, I'll go over all of this after I'm done. So the Learning Center, you review the basics of stocks. We have videos on that. And I do video updates at least 3 times a week. So just keep that in mind. Now, this is what's included. And I think John wants to get on to talk about this.
Yeah, no, so I found sometimes, Chris, too, after I've gone through a presentation, it's good to take a break. So I wanted to step in here for you and also just kind of talk about a few things I think that you'll find in this kind of arrangement of class options and continuing education options, which is, I think it's really great, and especially with Chris's style. And this is something we haven't done before. So if you look over, we've got the quick start. This is kind of the, you're like, okay, this sounds interesting and I want to learn more about this. This is where you look at. And so the first thing is that this is something where the class, which is normally $497, the 4-hour class on Saturday, it's just included. Like, you just get that as part of this. And in addition to that, you get a month of Chris's mastery service. Now, normally when we do a class, like, we do the class, and then after that, it's like, good luck, wish you the best, c'est la vie. And in this particular instance, and talking to Chris about this, he thought it was really, really important that, yeah, you know what, we're going to go through the stuff. I'm going to show them everything. They're going to have the 3 reasons to get in, the 1 to get out. They're going to know what the Brecher ledge is. They're going to know not to fight it. But what's going to happen is if they're looking at a 5-minute chart, on Tuesday, and the class is over and they have a question about it, I might not be on the mic in the room, and et cetera, et cetera, et cetera. And so what's great about this is that with the additional 30 days of training and guidance as part of his mastery program, you can actually sit there and continue to hone your skills. Now, after that 30 days, if you're like, you know what, I got it, Chris, I appreciate all the time and attention, and you're indefatigable. Is that a word? Indefatigable. Anyway, a lot of energy. I appreciate all your energy and answering questions, but I've got it now, and I'm going to go on my own. And thank you for teaching me. Or it may be something like, you know what, I like having Chris as a kind of a continuing voice of reason as part of my trading day. Of all the traders I know, Chris is the guy. He's Chris and Raghi, but Chris is he's up early. He's looking at the markets. He's getting everything prepared beforehand. And so by the time that the bell opens up, he's ready to go. Like, he's been studying this stuff. And I appreciate that, because instead of, it saves me time, instead of me having to get up early. Hey, I can't take the dogs for a walk, honey, because I got to look at the market. I know Chris is doing it, so I can kind of see what he's doing and see what's important to him, because he really kind of highlights and hones in on what are the major themes of that day. And I don't know if you know this about Chris too, but he's also really grasped what I would call unique situations. Things like when there's an index reshuffling, I don't really know what to do with that. Chris does. Those are days where you can print money if you know what you're doing. And those are things that he'll come up with in his mastery as well. Now, if you're listening to all this and like, well, this sounds great, you can actually get additional discounts by doing the quarterly package. So the quarterly package includes 3 months of his mastery, all right, at a discounted rate. So in addition to that, you're also getting the Saturday class. I didn't mention this as part of the first one, but you also get a bonus that he's going to teach on unusual options activity. Also, I know a lot of people, and we all know and appreciate that a lot of people out there are working other jobs. So they're working other jobs and they're pursuing their dream of trading. But he's also going to talk about, well, how can you do this if you can only trade part-time? He's going to do a special module on that. There's also something too, the final hour of Friday. So if anybody I know on planet Earth who nails weekly expiration with stocks, it is Chris. And I've learned a lot every time that happens. And he's going to do a special session on that as well. With the quarterly, so in the quarterly, you've got over $1,000 worth of things happening there. You can lock it in for $497. That also includes 2 days of live trading with Chris. So again, you're going to see the strategy. You're going to have 30 days with him, but also full on like live trading, soup to nuts. And then so you'll have that as well, which is great. And then of course, if you're looking at this is great, and you want to get the most savings, you do the annual. And the annual, you'll save, it's something like 30% off the price, which is great. Now, if you're already a member, so if you're already a member and you're the Options Gold Room or any other services, you actually have additional discounts available to you. I think those are on the next slide. Yeah. So the members, you'll save an extra $20 on the quick start, an extra $50 on the quarterly, and then an extra $150 on the annual. I think those will be applied automatically if you log in. But if and then that way you get the additional savings as that way too. So it's just a way to say thank you for being a member. All right. So I just wanted to go over that. Chris, give you a chance to catch your breath. And then we'll stick around here, guys, and answer questions. And then, Chris, if you would like to go through and spend a few moments on each of those bonuses and exactly what's included, that would be awesome.
Yeah, sure. I'll do that. And thanks for the nice words, John. I'll pay you later for that. But
just give me a good trade idea.
Now, okay. By the way, great questions in here. I'm happy to answer them, but I'll do it at the end. So I'll just so don't give up on me. I am looking at the questions, and I'll definitely try to answer them at the end. So one thing though, I'll trade options, I'll trade stock, I trade patterns, I'll do long-term trades. We have some option trades we've had on for 4 weeks that we still have on. So definitely I'll put on longer term trades also. So I try to show all those just so you know. Now, this is the other thing. You get a subscription to the Chart Pattern Mastery Room. You get my 4-hour class, which really answers a lot of your questions, but I'll go over some anyway. But you can find those 3 proven chart patterns in a lot more specific way that I've used for 40 years. So I'll reveal exactly how I trade them, how I combine a lot of other chart criteria, fundamental criteria, and I actually have a slide with my checklist of how I start the day and what I go through.
Hey, Chris, I see a question here. I thought I just want to answer real quick. It says, hey, I have no experience at all. Can I still do it as a beginner? Will there be help? So one thing I appreciate about, especially if you're newer to trading, and especially if it's whether it's stocks or options or futures, if you're newer, it's like, oh my God, so much stuff can go over my head. I think the best way to start out as a beginner is understanding patterns. If you understand patterns, that's kind of the building base for everything else. Chris had mentioned earlier that the squeeze a lot of times lines up with the bull flag. The first thing I learned was a pattern. The squeeze I like to use like, okay, how can I enhance it when something like that sets up? So if you're a beginner, someone like Chris who's been doing this for 40 years, he knows a lot of things that, and he can really go down the rabbit hole. But the basics of just learning the chart patterns, that's going to put you on whatever trading path you end up on. That's going to give you a strong foundation. I see a lot of traders that start off without that, and they kind of get frustrated and confused along the way just because they don't understand that force is always on the market. So it's the best way to start out.
Yeah, and also, I can't stress enough that if you see tight bull or bear flags, let's say in the SPY, and you want to experiment to gain confidence, you go and put in one share. Now, why would I say put in one share? One is you got to have skin in the game. I don't know if I agree with this thing about paper trading. Like I'm 100% right with paper trading. But when you see a defined pattern, you can learn on even a tiny amount of shares how to buy on the offer, how to put in stop orders, what moving averages we're watching. It's a lot easier to learn on these patterns. And keep in mind, that's how I turned 200 into 25,000 was using these patterns. And that was about it.
One share of SPY, though, that's kind of like kissing your cousin. You might as well do 10 shares.
Yeah, 10 shares. Fine. It was just more. I was showing that yesterday with a bear flag and talking about just trade 10 shares. And it went down, 3 points. It doesn't sound like a lot of money, but it got you confidence that kind of flag works. And then you can get bigger.
Chris, I just saw another question here too that said, hey, I'm not available this Saturday. When is this class going to be offered again? So it's a great question. And the answer to that is it's not. So the way we do it is the class will be this Saturday. It'll be recorded. But there is an incentive if you think you want to do it to sign up now, because after the class is done and then it's released on the site, the price goes up actually quite a bit. So the best thing to do is kind of, if you want to lock it in, and then you can go back and watch the class at your leisure, but that way at least you have it at the kind of the entry price.
Thanks, John. Well, the class also combines indicators, and like I said, they can change every day. But the biggest thing on our site is to help with staying on the correct side of the market to begin with, and how to build confidence, which really helps if you know the correct side of the market. Now, I'm not saying I know it, but I try to keep the probability in my favor. And we can use stocks, options, futures. And somebody asked a good question about Google, and I'll go into that in a minute. It's a great question. Now, how do I find them? I flip through my hot stock watch list. I use a squeeze scan, or you can just wait for me to find them for you. Like I said, I'm here all day trading. I'm not out playing golf or entering things on Amazon other than option trades. And so you have that continuity that I'm here and I'm here to answer your questions. Now, with that, I'm also going to do pro live trading. Like the graphic above shows when you get that. So you get 2 hours of live trading. Now you might say, well, you're on all day anyway. So these 2 hours here, 2 hours here. The difference is this is going to go over real tight patterns. Like John said, I'll trade rebalances, all this, but this is going to be about the basics. We're going to go on the basics.
Chris, I saw another question there. Is this I just logged in? Does this work on futures? ES futures are some of the best things to do with this. So, Chris looks at stocks and then doing options on stocks. But, if you're a day trader of futures, knowing these patterns, especially like on the 1 minute and 5 minute charts where you get those quick 8 and 10 handle pops, it's basically designed for that. Yes.
Yeah. And I'll give you another thing about that. Definitely it's about futures. And I'll show you a great reason. The SPY tonight. So let's say that you see a setup in the SPY ETF. It trades 24 hours basically. That's fine. So you're like, yeah, I think it's going up, but I want to put in a stop if I'm wrong. You can't put in stop orders after 4 o'clock. So futures, you can put in stop orders 24 hours. So that's a tremendous amount of risk if you have to watch every tick. So you can't put in stop orders. So futures, it really matters in futures. So definitely for the futures trader. And the other thing, and answer your question about longer term trades, part-time trader strategy. So a lot of people can't watch the market all day, or they don't want that stress. So I'm trying to find good patterns. I'll give you, for instance, this was a good percentage gainer. We saw something that looked like a bull flag. I'll show you. There's your bull flag right there. And this is weeks ago. That's where we bought them. We bought them right there on, what day was that? Long time ago. So back in here. So what did we do then? Well, we bought the 7.5 calls for 10 cents. 10 cents. Well, we sold them at 40 cents. We were in it for 2 weeks. So definitely, if I see a good rounding bottom or something, or a bull flag or a bear flag, sure, I'll do longer term trades. Just want to let you know that. You also get this. I was on the CBOE for a long time, and I did ARB stuff when I was with the electronic trading firm in addition to patterns. So I watch unusual options activity. So a lot of it, you have to be incredibly picky. I know on CNBC, they just show you like 30 unusual options. It doesn't work like that. There's a lot more intuition into it. You got to know if they bought or sold, if it was a combination or a spread. And I try to show all that. And I also will look at this intraday for rumored takeover stocks like SPLK. The other thing, and I'm excited about that, 2 hours on the end of the day this Friday. 2 hours of me being on, and I'm going to try to find you some good flags. So like you saw the Dollar General and the Amazon flags, they work great. But if I see something like this, I'm not saying Yext, but I'm saying just this, where it's garbage, we won't get in. We're looking for identifiable bull or bear flags. And by the way, I know I mentioned it earlier, but a Brecher ledge is a bear flag with a horizontal trend line that has no chance. It's not a triangle. All of this is a bear flag and then a lead weight while it works off any kind of oversold. That's what a Brecher ledge is. The other thing, interest rate free for 6 months if you click on the PayPal credit. So you can defer this if you get the elite pattern where you get a total of 8 hours with me on live trading. And here we go again. The prices go up on February 11th. Now, let me just tell you. So you get my mastery room for $197. You're basically getting the chart pattern secret free. This is such a great deal. My wife signed up for it. It's amazing. So I'm trying to get my daughter and my son to sign up for it. I haven't gotten that yet. So in there. So this class is for traders that want to combine chart patterns, and keep in mind, it's for futures, ETFs, you name it. And I'm teaching it now because once the Fed is not at your back, there are a lot of moves on the downside that are dramatic. And you don't have to have indicators, but they help. I use them and I change them around all the time. I'll go from Fibonacci's to VWAPs to just the 50 moving average. Whatever starts working, I'll do. And I'll work on all time frames. I'll go from 1 minute to weekly. Usually I do them during the day right now because I've had to shorten my time frame because of this Fed. And any size trading account can work with this. Now, like I said, Reddit, internet, nobody seems to show the charts the way I do. They don't have 40 years experience. The feel is something you can learn, but you have to be there in the class and in the room to learn what my feel is, because my feel can change every day. But I'm just telling you, these patterns, the people on internet say they're 55% effective. You got to combine them with a lot of things. And I haven't seen any of these that show that. And like I said, it's much better than other classes. Don't think that I don't look at other YouTube videos or I look at Reddit. I look at them all. And I just haven't seen a better way to do them than combine all these things that I show and that they change every day. Adapt. It's very important to adapt to the conditions. And I try to find identifiable patterns. And I try to show you when ones don't work. And some of the questions you asked, I'll try to help. I'm actually trading full time, so I'm using them still. And I'm constantly looking for new indicators.
Chris, I think one thing too, and I saw a couple of questions about this, is that from folks just mentioning like, some frustrations that they're seeing with the current market. And I think that if there's anything, that this class can really be, who is this class good for? The class is really good for people that are frustrated in the current market. It's the combination of a lot of times, combining patterns is the missing piece if, you've got other tools and things that they're using.
Thanks, John. And like you see, this is the quick start, the quarterly, and the annual. The annual, you get 8 hours of live trading. So you get 2 and 2 and 2 and 2. And there's a discount on all the packages, like I mentioned earlier. So that's your webinar. I hope you've enjoyed it. Now I can go over some of the questions. I'm sorry, I just didn't want to do it before. And the reason is probably ADHD. So I'd go from your question and forget about the flag, and I'd go and probably talk about all my hummingbird pictures or something. So I'm sorry I didn't see your questions first. So a flag is a continuation pattern. Then you get something like that. So you get a continuation pattern followed by a rest and rehabilitation. Usually that happens from resistance, the overall market forces, or just an overbought or oversold condition. So it's the move before that matters. And that's how you know it's a bull or bear flag. So just keep that in mind. The bull and bear flags happen not after they break up or down. We're playing the second move. You're missing the first move. You're making the second. That's the way I'm trying to do it in here. So in the flags. Now, this is a great question, Juan, about how do I make my entry? So I wish I had a whiteboard, but basically, this is the way I do it. Like deer, I haven't done yet. If I was going to do deer, saying that this looks like a bear flag, it's a layup. It's looked like a layup for days. If I decide to do it overnight, because it might gap down, I usually use 1/10 of my capital. So I'm anticipating the breakdown. I don't like doing it that way. The ideal is a breakdown and then a test to that. So either one of those, it's the second leg we're caring about. So it's definitely the second leg we're caring about. So I just want to make that clear. Yeah, sorry about that. And the entry, like I said, you can anticipate, which is scary. Now, if it's a real tight bull or bear flag like this, let's say it's like this, where you can have a tight stop, sure, you can try to buy at the bottom of the flag. The problem is that this might take a while to develop. So you're occupying your emotional and financial resources maybe for longer than you need to. So the other thing, great question in Google about what do you do at the end of the day? So let's say Google is 100. Now I'm just going to put it over here. So let's say that Google is 100. And I think it's going to 98 by the end of the day. in the last 30 minutes. Well, I don't want to buy the 98 calls, puts, because that's my objective. I don't want to buy the 99 puts if they're like 70 cents, because my objective is only $1 intrinsic. So I probably would buy the 100 puts. So if the stock is 99.5, let's say, with a half hour to go, I'd probably buy these for 80 cents. So I have a lot of intrinsic value in them. So I hope that answers your question. Now, like I said, in the last 30 minutes of the SPX, you got to see a bull or bear flag. Today, you would have lost money both ways at the end of the day because it just sort of sat there. Let me see which other ones I'm missing. And I'm sorry if I've missed any. All right. Can you scan bullish or bear setups with toss? Definitely, both sides. But the difference is the criteria can change from day to day. That's what I'm for. But yeah, I'll share scans in the room and in the class of the scans I'm using now. Now, the other thing, feel, it's not a feeling. It's not like the published market trend in IBD. Even though that's worked at times, it might be that the bond market and the stock market have diverged too much. So in that case, I'm looking for more bearish patterns in the ES unless the bond market catches back up. So feel might be, well, I'll give you another one. Here's another feel. This is just from experience. General Dynamics. Let's say there's geopolitical tensions. So it has to have a good chart too. Don't get me wrong. But every Friday in here, General Dynamics went up because everybody was worried about something bad happening over the weekend. So what happens? You try to buy it, some kind of options or stock after the opening. Now, why after the opening? Because people bid it up on the close, thinking something will happen, and then nothing happens, and the stock dies, it hits support, and then you buy again. So that's one thing about feel and experience, but it does change every day. And all the time frames don't have to be aligned, but they definitely have to be. I do this. If I want to day trade, I want to look one time period farther out, at least one. So if I'm trading a 5-minute chart, I want to look at a 15 and a 60. I want to be sure I'm on the correct trend. So I don't have to have all of them line up, but you try to determine the trend longer term to help you with the shorter term trade. And for the majority of positions I'm taking, I'm telling you, it's half stock, half options. So when I see like Lamb Research forming a big ledge, you could trade stock or you could go in and you buy puts. So just keep that in mind. I'll do SPX, more debit spreads than credit spreads. I hate that the SPX credit spreads are so cheap. But if I see a bear flag, yeah, I might do like JC does it, an at the money credit spread. It's a really good idea. In fact, Danielle today did an at the money, yesterday, an at the money put credit spread in a stock with earnings and cleaned up. So yeah, we'll do all kinds of spreads. So just to let you know, we'll do all kinds of spreads. And I think that's all of the questions. Thanks for all the good questions. Like I said, class on Saturday. I'll be going over all this a lot more specific, and I'll keep pulling over chart patterns to show you what's going on now. So thanks for listening and take care.
Good stuff, Chris. Well, I'll be checking out the class as well. And everybody on here, will leave this page up. You can see the link, simplertrading.com/patterns. If you guys have any questions. And yeah, look, I highly encourage you. This is a very, very small investment in your future. And, this is the kind of thing where the ROI can last a very, very long time. It's that little edge that you get out of the market. So if you're on the fence or something like that, I encourage you to believe and invest in yourself and make this happen. All right. You guys have a great night, and we'll see what the market has in store for tomorrow.
Thanks, John.